It is halfway through the week. It's 8:04 a.m. on Wednesday, June 26. You can see the levels identified to trade against in the E-minis. There is nothing during the day scheduled in terms of data releases that may do anything other than after the market closes, there's a bank stress test info, 16:30 or 4:30 p.m. Eastern. Then we've got a few things for the rest of the week. Thursday, there's GDP announcement in the morning. Friday, there's CPI. And then next week, there's a few things. So don't know what the market's waiting on. Maybe they're just going to grind higher like they've been doing, but they're flat right now. And we will see after the market closes if and when they react to these levels. We'll take trades at them if everything looks right at the time the spiders get to these levels. We'll come back to this chart after the market closes, look at the trades, and discuss them then. Thanks. See you then. The market is now closed. It's after 5 p.m. I wanted to wait till after 4:30 p.m. just to see if that bank stress test would do anything in the post market. As far as I can tell, nothing has come of it yet. Maybe we'll see some effect tomorrow. But for now, let's get into the trades that were taken today. I'm able to go ahead and get this recap video done a little earlier today, so why not? So what happened with our levels today? I'll apply the 5-cent buffer to the 3 levels that the spiders hit, and then we'll get into the trades. You'll notice that before my official starting time of 9:45 a.m., the spiders came up into 543.93 on the button here at 9:38 a.m. They hit it to the penny. And they fell away pretty fast. That would have been enough for a base hit, like a pretty quick one. But as a rule, I just like to take trades after 9:45 a.m. So I waited. I should mention at this point, I already had entered a short position in the pre-market. I sold one contract around 8:30 or so, and it was already about 10 ES points in the money. And yes, I know that is somewhat unusual for me to do, but I just had some clues early on that they might gap lower at the open, and I just thought it'd be cool to hop on for the ride down. As you can see, that turned out to be the right call. So when the spiders hit 543.93 from the underside after 9:45, I added to that position by selling one more contract. And so I rode this out. We'll talk about this later. And I rode the 2 contracts down right to the next level at 543.08. And then I actually bought 4 contracts down here. So effectively closing out my 2 contracts and putting me in a long position with 2 more, if that makes sense. And maybe I'm already getting into the weeds a little. This will become more clear when we look at the time lapse of the trades, the screenshots I took. I think it's a little better this time. But first, let's talk about what you would have done simply playing by the rules. Nothing fancy, just treating each level independently while taking into consideration what's going on in the market in real time. So using several tools in conjunction with one another really does help make more informed decisions about what to do or what not to do at these levels. There are kinds of things that I'm trying my best to convey in this trading course. So for those of you on the sidelines waiting for that to be available, thank you for your patience. I just want it to be as perfect as I can make it and provide a ton of value. So I keep adding and tweaking things. So back to the trades today. If you were playing by the rules, so you would have went short here at 543.93. That should be obvious. They kept going higher. So would there have been a time and place where you would have needed to second guess the trade and either close it out for a loss or reverse it, which is usually somewhat of a gamble when you reverse it? Well, on this trade, no, and I'll explain. So first of all, I'll add the profit and loss reference levels. So we're still talking about 543.93. I made it a little bit bolder so you can see what we're talking about. And the red and the green lines are the profit target because you want them to come down and hit your green line. That's roughly 4 points in the ES and the E-minis. And you don't want them to get above the red line, which is the fumble threshold, and close certain candles within a certain amount of time there. If that happens, a plan B needs to be instituted. And there were the right closes and the right time component on this trade, but you always need to consider what's happening in real time. So there are 2 reasons why you would have wanted to stay in this trade longer, let it develop, and hand you the base hit eventually. One is the gap left over from the day before, which is roughly around 544.80 or so. And this level here, 544.80, was not on the board this morning as a tradable level because it was just a gap. There were no convergences with the formula derived level, so usually gaps are just less important when that happens. So I leave them alone. But today, you can see that the gap was, right here, was the money spot. It was pretty important. So just being aware that it's there and the price could react is one reason why you wouldn't want to jump out of the trade, much less reverse. The second reason might not be so obvious. There was a trend line that I had on one of my other analysis charts that was right here. For all I knew, the SPY was headed there as like an interim destination before reacting back down. They came up short of this trend line right around the gap and pulled away pretty fast, which is a decent sign that this area was providing some overhead resistance. And this trend line does come into play later if they get above it. I took that to mean, at least for the near term, that they wanted to go higher. And I actually found another trade up there, even though they didn't get to this level here up at 545.62 in time to trigger trade. They did later, but that's after 3:30. So anyway, long story short, playing by the rules, you would have ridden this short trade here, ridden it out, and got a base hit before they got down to 543.08, base hit number one. And then, yes, you would have triggered a long trade down here, and that was a quick and easy base hit. And the way they kind of got away from this level down here, I'll go ahead and take away these those reference lines, but the way they got out of this level and then they kind of consolidated and launched off the next level was kind of perhaps a hint that the bulls were trying to push price higher. And sure enough, when they got above this trend line, that was kind of where my other trade came into play, and we'll look at that next. So 2 base hits playing by the rules was what you could have gotten today so far. So here is a screenshot of what my ES chart, my E-mini chart looked like at 9:38 a.m. So this was yesterday, when I closed out that other order. And here's where I went in short before the market. And I mean, this doesn't show the aftermarket time. This is just a open session only chart. So that kind of points here, but I entered the trade here and I'm short. So I'm pretty good, 10 points or so at this point. And there are a few, I may have to pause and to show you, I'm just going to start playing this. So at this point, you can see that this is right above my line in the SPY. I'm just going to get out if they got down there. But they got up to this level. I told you I added to it by buying one or selling one more. So I'm short 2. And I rode that down. So here we go. So here's 2 contracts. And I realized a limit order just to buy it back and get out of the trade. But this was right near the level below. So what I did was change that to 4. There it is. These are just like screenshots every few minutes or whatever. There we go. So this is where I bought back 4, closed out 2 essentially, and then I was long 2 and got a quick base hit out of that. And they really launched up from here and went farther, but that was kind of it. So here's basically the screenshot, and it was a little bit smaller, but these 2 levels were then satisfied for me. So to me, that's just kind of a simple way of showing those trades, and we'll look at the next trade that I kind of invented based on a few things that I saw in real time. There's a lot of screenshots in here all stitched together. I'm just going to start playing it. So at this point, didn't know whether they're going to bounce off this level up here in the SPY, come down, but I had found an area here, and you saw it came in and they filled it. And then I thought, well, all I need is about $500 more to clear $2,000. I was already $1,500 to the good at this point. So I thought they could get 5 points out of this. So I changed that to 5, but a few things changed. They came down, kind of faked me out. We go back in the full day and see it. I added the position at another level that I thought would be pretty important. And that way I was able to lower my, I was going to pause it now, able to lower my profit kind of objective. I'll go back to it in case you missed that. There it is. So that was just a few points. What is that, 3 points or so? But that did the trick. I mean, I'm not saying that my goal is just to try to make a certain amount of money, but this is going to be obvious resistance when they get up there anyway. So it'd be nice to jump out before they get there, as you can see. So of my 4, I took out 3, thought I could trail 1, but since I'd only got 3 points or so out of this, I didn't have a big trailer, or like 4 points or so. So it really wasn't enough leash. As you can see, they pulled it up a little bit. I think it was $87 or something. Here we go, $87.50. Never got any higher to stop me out. So that's the way it looked to this point. And that level in the lighter blue is the level that I identified and kind of invented, if you will, based on some things I saw in real time. So not too bad. Made a little bit of money today. Just another visual. All these lines are dotted now because they've had successful trades. And no, this level that I identified in real time is not because it was a gap. There were other things that had to do with moving averages and kind of where they were coming down into this consolidation pattern that on one of my charts that made me want to go long there. So anyway, you saw those happen, and wasn't too bad of a day. So we have 2 more days until the end of the week, and they're still acting like there's no gas in the tank. I still maintain that they're going to wake up soon, if not this week, next week probably. Something needs to happen with this whole timing thing that I keep talking about. But they rarely make it easy. Some kind of black swan might materialize and kick this whole thing off. But until and unless that happens, I will just take what I'm provided with each morning and continue to trade using my strategy. It just keeps me happy most days. And by the way, as you'll see soon, just trading 1 or 2 ES contracts at these levels here, as I was saying, netted me over $2,000 in the tracking log. It was actually over 20 ES points. So we'll look at that log right now, in fact. This first log, of course, is playing by the rules. 2 base hits, nothing fancy. And of course, we didn't talk about the last level, but it was hit well after 330, and that would not have been triggered. So 8 ES points, playing by the rules. Mine was, different. I still got my base hits, but it was just more points or less points with trailers and things like that. And that pre-market trade. So 20.5 total ES points across these different levels. And here's the new level that I added. So not a bad way to get some money using just 2 contracts. That's not unusual with 3, 4, 5 contracts or so, but I've been trying to play kind of conservatively lately. Anyway, so hope you enjoyed this, learned something, and crazy things can happen coming up. I don't know. It's hard for me to imagine they're just going to continue to be really sleepy throughout this week and next week, and when the timing is important. But anyway, we'll see. Take whatever the market gives us. So thanks for watching. We'll come back tomorrow and do this all over again. Have a great day.